Have you invested today? Because every day you don't invest, time starts working against you. I get it. With so many investing options, the hardest part is deciding what to invest in, whether that's individual stocks or index funds. And by the end of this video, you'll see exactly what I chose to invest in and why. Last episode, the wheel landed on large cap growth. So the category is decided. Now the question is, do I buy an individual growth stock or a growth index fund? And if you haven't subscribed yet and want to build your investment portfolio, I'm documenting every dollar I earn and every investment I make on my journey to $1 million. And to everyone who already subscribed, thank you. Now, let's walk through the decision most beginner investors face. Imagine you and I are sitting around the kitchen table talking about money. You have a few $100s to invest, and you're wondering, should I pick a company like Amazon or should I buy a large cap growth index fund that owns hundreds of companies? Because owning an individual growth stock sounds exciting, but losing money, that sounds terrifying. Let's look at large cap growth individual stocks first, such as Nvidia, Apple, and Amazon. This means your success depends on that one company. If it wins, you win. But if it drops 20%, your portfolio drops 20% too. That's called concentration. That's why there are 5 things I look at when I pick a stock. 1. Financial strength, meaning is the company profitable? 2. Growth stock potential. Can the company expand? 3. Competitive advantage. Does the company have something competitors can easily copy? 4. Risk. How much are you relying on one company? And 5. Valuation. Is the stock undervalued or overvalued? Well, let's compare valuation to each of these stocks. Because these are growth stocks, it looks like Amazon is the only stock that is fairly valued. The other 2 stocks are expensive at the current price. Now let's look at index funds. Instead of buying one company, you buy a bunch of company stocks in that index. Let me show you a simple example. Here is a jar of jelly beans. Each color of jelly bean is a different company. For example, Amazon's yellow, Microsoft is blue, Apple is red, Nvidia is green, Meta is purple, and the jar of jelly beans is the index fund. Many investors build a portfolio using a few core funds, such as domestic stocks like the S&P 500, domestic bonds, and international stocks. Now let's look at large cap growth index funds, such as Vanguard Growth Index Fund ETF, iShares Russell 1000 Growth ETF, and Schwab US Large Cap Growth ETF. Next, let's look at the growth of these index funds if $10,000 was invested over the last year. As seen here, each index fund growth is similar. I also looked at the 1-year average return and the expense ratio, which just means how expensive is it to buy. Here's how they compare. VUG has the most growth over the last year. VUG top holdings include the 3 individual stocks, Nvidia, Apple, and Amazon. IWF and SCHG also include Nvidia, Apple, and Amazon, but with different percentage allocated for each company. So you're investing money in an entire category of companies growing over time. And here's something interesting. Many large cap growth index funds will pay dividends, even though some of the companies inside of them don't. For example, Amazon and Netflix don't pay dividends, but Apple does. So even if some companies reinvest profits, the fund can still generate income. Which brings me to the income earned since my last investment, where something interesting happened. Several small income streams started adding up, and for full transparency, I have put all the receipts together. On the day I recorded my 30-day challenge, I had another buyer from Facebook Marketplace. I sold my 2 patio chairs for $41. Next, I received interest income from my high yield savings account of $85.11 in January and $87.25 in February. I also received a $225 cash reward bonus for signing up and depositing money into a high yield savings account. Next, I received cash rewards from my credit card of $26.11 and a dividend payment of 75 cents for my current investments, which brings my total earned to $465.22. And the best part, I didn't work for that money. All I did was find resourceful ways to earn it, and now I'm going to invest it. So after reviewing individual growth stocks and large cap index funds, Now the question becomes, where does that money go? Because every dollar I earn in this series gets invested. Well, I decided to invest that $465.22 in VUG, Vanguard Growth Index Fund, ETF. And the reason is simple. This chapter of the series is about beginner investing, but as the series continues, my strategy will evolve as we move into intermediate and advanced investing. Today, I'm choosing an index fund because instead of relying on success of one company, I'm investing in a group of companies growing over time. Also, VUG owns hundreds of large growth companies, has the lowest expense ratio, and it still generates dividend income. And most importantly, it lets me stay invested while the market does the heavy lifting. Now let's update the spreadsheet based on the income I earned and what I invested in to track how much I invested so far. And if you're a visual learner, let's take a look at what my portfolio looks like now, which includes large cap growth, large cap value, and large cap blend. For example, VOO is considered large cap blend because it includes both growth and value companies. By investing across different categories like this, the overall risk of my portfolio goes down. That's exactly what the risk versus reward wheel in this series is designed to teach. Throughout the series, I will gradually build a diversified portfolio. Now that $465 is working for me without putting in hours of work at a 9-to-5 job. So, what type of portfolio do you want to build? I'm curious. And if you're stuck building your portfolio and need clarity, I work with a limited number of people one-on-one each month. You can find that link below. Next week, we're going one step deeper. I'll explain the difference between index funds and ETFs, and I'll show you what I'm investing in next. And if you want to follow this journey as I invest my way toward $1 million, subscribe. Thank you for watching. See you next week.